and will take me a few seconds here, and then we're all set to go. Okay, Zoom live, setting up for your custom streaming service. Excuse me, guys, enjoying the long weekend here? Hope so. Okay, I think we are all set. Here we go. We are all set to go. All systems go, folks. All systems go. And I gotta move this guy over here. We got two screens, you can tell, right? All right, let's get going. Here we go. All right, good evening, everybody, and welcome to DayTradeSPY.com's weekly fireside chat. Introduction to trading preview of the coming week. This is what we do every Sunday night. Been doing this now for, oh my gosh, what are we in our 16th year, I guess? 16th year, right? And not a lot has changed, just the numbers, the format a little bit. Anyway, my name is Hugh. It is February the 15th, 2026. Got a little bit of a co-host here with me tonight. And her name is Junie Buck. She's a cat that we're cat sitting. And excuse me, real pain, this cat. I gotta be honest with you, but she's very nice and very cuddly and very needy. She's a very needy cat. So she always insists on coming up on my desk here and right in front of my monitors, and she'll probably be poking at the monitors and trying to catch the mouse or whatever the cursor. Anyway, it's a nice cat. She's looking. It's so funny. She's on the one screen. I've got my video of myself coming back to me, right? And she's actually very intrigued at how I could be on the monitor and I'm over here in real as well. So she keeps looking back and forth to see how is this happening. Anyway, I know you're not interested in that. I'm just kind of killing time because a lot of people are still coming online here this evening. So I'm giving them a couple of minutes to join us here. So come on in, gang. Lots right here up at the front. Okay, a lot of people still coming online. All right. Please use the questions box for any questions or comments you might have, folks. All right. This is actually an interactive session. That's really what it's all about here. It's actually supposed to be your night so that we can actually answer your questions and talk about trading and talk about all kinds of things. All right. Kind of a very casual evening, just sort of a, I mean, I like to sit and have a hot chocolate or coffee or tea with you. Some people might say have a drink, but I don't feel like it tonight. I think a drink will put me to sleep tonight. So it is Sunday night, and there used to be a time I could be up all night. Oh, there goes the cat. There, you might see her tail. There she goes. So she's going to go over to the side, sit down there, and she's going to come back and forth. You'll see this tail probably in the camera. Anyway, doesn't matter. All right. So questions box open for your questions and comments. We'll get to those in a little bit. I got to give you the disclaimer. I'm going to leave this up there for a few seconds, let you read it, study it, go over it. Make sure you understand that you alone are responsible for all your own trading, and past performance does not guarantee future results. All right, there we go again. Want to introduce you to your hosts. My name is Hugh, and I'm the only one here tonight. John's got the night out. John actually does the Wednesday night sessions. So he flipped it over. I do the Sunday nights, he does Wednesday nights. The inner circle sessions, that's what he does, inner circle sessions. And I know he prepares extensively for these. He loves them. He loves them. So bear with me while I have a little drink here. Wet my throat. Um, Let me know if you are new to our website, new to day trading. Let me know in the questions box. All right, just curious. So, um, okay. Anyway, so here she goes. Here she goes. Yes, yes, I know, Junie. So my name is Hugh, right? I have not spent any time in a trading. I'm not going to kid you in a trading. In a trading. Not to say trading room on a on an exchange floor. I didn't spend any time on an exchange floor, although I did many years ago go to the Chicago Board of Exchange there and in the gallery and just sit on your cat and observe for a little while. But what I learned from the trenches after my own financial advisor blew out half of my account. I realized that I have to take matters into my own hands. And I'll never forget after I had picked up my check from his office and driving home, I realized a couple of things. Number one is that nobody cares or should care more about my money than me. And that's the same for everybody, all of you, right? It's impossible for anybody to care more about your money than yourself, right? And you should care about your money. I also discovered a few things that I think most of us spend more time planning things like our vacations, our meals, where we're going to go for a restaurant tonight. We spend a lot more time planning that kind of stuff than our own financial, uh, you know, retirement funds and stuff. Crazy as it sounds, right? I did a lot of work into this and studies and stuff, and it's true. I had the numbers, but I don't have them handy anymore. I mean, a lot of this stuff kind of comes and goes, and it changes all the time anyway, so it doesn't really matter. But it just kind of gives you an idea that we as a society spend a lot more time, planning other things that are not as important as our financial futures. The other thing I realized is that we now have the power. Each and every one of you has the power at your fingertips to manage your own funds. You do not need a financial advisor anymore, just like you don't need a travel agent anymore to plan your vacation. Not that you ever really did, but I guess a travel agent would have been handy to book, better hotel rooms or get you better deals on flights or something. But you don't need a financial advisor anymore. You have the ability to learn how to manage your own funds. And if you do a good job, you are well rewarded, very well rewarded. Okay. We have discount brokers. We can actually execute trades and, at a relatively cost-effective way. So you can do that, or you can leave your money in managed funds or whatever you want to do. Okay. All right. So I see some questions coming in. So after several years ago, I guess it was in 2022 now. My gosh, goes back so far. Was it 2022? Was it 2024? Can't remember. It's 2024, I think. Yeah, when Eagle Financial Products, or was it 2022? I can't remember. Isn't that funny? I can't remember. I'll have to check back. Time flies. It goes faster as you get older. I think it was 2022, actually. Yeah, because in 2025, it was 3 years. So it was 2022. Eagle Financial Products took notice of us and made us an offer that we couldn't refuse, so they bought us out. They said, well, we want your trading room. They saw some real value in that. And we love them for that. But then they hired us back. They hired me back, and we continue to manage it. But they also brought on John Johnson. Excuse me. So John Johnson is a lawyer by trade, a very good lawyer at that. He gave up law. He gave up law to trade and to teach other people how to trade. He had a very lucrative career in the oil and gas industry in Texas. Do some real high-end litigation work. He's no slouch. Super nice guy, very intelligent, excellent communicator, and he runs the trading room with me every day, and we'll talk about that a little bit. His philosophy is very simple: take what the market gives you. So we both have different, same philosophy, but different angles of approach. And by coming in from different angles, we are actually able to do quite well in the market. Even in trying times, I'm going to be perfectly honest with you, this last week was pretty trying. We had some trying times coming up. We'll talk about that a little bit. But together we have actually a saying that says, when our indicators unite, our trades ignite. And that is simply because John looks at one set of indicators and I look at another set of indicators. All right. So I like to use my set of indicators for my trades. He likes to use his set of indicators for his trades. But when they match up nicely, we got a winner. Anyway, moving along, folks. Want to remind you, Spy in the Market. This is a newsletter that goes out every Thursday night. All right, every Thursday, not at night, during the day's Thursday. Easy to subscribe to it. Just go to our website, DayTradeSPY.com. And when the pop-up comes up, just put your email address in there and you will receive this newsletter. Very light reading. It's entertaining. It's just a very brief maybe 3 minute read. 750 words to be exact. Okay. And this week's topic is dealing with crazy times. Trade small, trade often. Trade small, trade often. And that's going to be our 2-minute tutorial tonight, too. Trade small, trade often. All right. So I'm going to take a little survey now to kind of get an idea as to who is on. 'Cause I know a lot of new people are on, and there's a lot of people that may or may not know about trading or options or what we do. And this is what I want to establish because we kind of invited people through social media to join us. So please take a minute here and do not be shy because this is how I can tell what you need, what you want to hear. Don't be shy. Let me know if you are a beginner, if you know nothing or very little about options, because that's what we do. We make money by day trading stock options, and we do that by just trading one stock, a stock that follows the S&P 500. Essentially, where the top 500 stocks go in mass, that's what we like to follow. So please put in the questions box. A, if you're a beginner. B, I know what calls and puts there, but not a whole lot more. C, if you're intermediate. D, if you're proficient, understand theta, delta, volatility, and are wondering, what am I doing here? I'm kidding about that. This is just a self kind of assessment thing. There's no, no right or wrong answer. So just put the questions box where you sit with this, and I want to make sure that I don't leave anybody out. Okay. Okay, don't want to leave anybody out. Okay. All right, they're all coming in here. Well, we have a lot of C's, D's, several B's. Okay. No A's yet. No A's. Okay, good. Okay. All right. So I don't have to tell you what calls and puts are, right? Okay. And we'll talk. And listen, if you have any questions, please put up in the questions box. I will aim to answer them in a little bit. And I don't want to leave any questions unanswered, but we're going to move along here, folks. So this is what, I'm going to skip the primer because it looks like nobody needs the primer. I don't see any A's. I thought if I see a whole bunch of A's, then I can move along. Okay. Of course, there's one in every group. E is Johnny, my buddy Johnny. But anyway, all right. Here's what SPY did this week, folks. Let's just quickly go over this here. Actually, it's not what happened last week. This is important as what's coming up. I just want to give you an idea as to what happened here. What happened with the choppiness of the markets and the insanity that we had seen over the last few days. All right. So on Friday, last Friday, not this last Friday, but the Friday before, we saw SPY having taken pretty well taken a bath from what 696 down about what's that 670-ish, 671. It's about a $25 drop from here to here. But a $25 drop from there to there. And that's huge. That's huge. Let's see if I can put in a drawing here. I don't know for these drawings. Color. I think these drawings are just spotlight. I'm going to skip the drawings. Okay, let's close this. $25 drop from last Tuesday to last Friday. Not this last one, the week before. However, on Monday, this is what I like about the market. The stock market is actually very resilient. It can handle it can handle bad news quite nicely if you give it a little bit of time. SPY came up on Monday here. All right, and it closed beginning of the week, snapped a major 18-point sell-off on AI concerns. I had 18 points, but I'm successful going back to probably about Thursday or front Wednesday. But if you go back even further, you'll see a 20, 25 point drop. And on Monday, very interesting, Dow topped an all-time high, breaking 50,000. That was and I know we don't trade the Dow. All right, we don't trade the Dow, but it was a milestone event, and I thought that was just kind of worth noting. And of course, the S&P also saw some very, high numbers as well. On Tuesday, SPY the S&P 500 held on for much of the day on favorable retail sales reports. In other words, they were a little bit lower than expected, if I recall, which is anti-inflationary. which is good for interest rates. Okay, and that's why the market held on. However, it did slip slightly, some major resistance and some profit taking after that 25.2-day rise that we had. And then on Wednesday, we had some employment numbers that had come out. Initially spiked SPY up, but then it pulled back on Google anxiety surrounding artificial intelligence spending and weaker than expected growth in the cloud division. So we have some factors that play on SPY, right? The big one really is for the longest time was and continues to be interest rates. Interest rates, of course, a major factor as to where the stock is going to go. But these days, so is artificial intelligence. Or maybe I should elaborate a little more on that. It's the Magnificent Seven stocks. And I know you're going to ask me, what are the Magnificent Seven stocks? And I will tell you what they are. Okay, what I don't want to miss any, so I'm going to tell you exactly which stocks are the ones that we are talking about here. They are Alphabet, which is Google, Amazon, Apple, Meta, which is Facebook, Instagram, WhatsApp, Microsoft, Nvidia, and Tesla. All right. These stocks represent roughly 35 to 40% of the entire capitalization of the S&P 500. Okay. Um, Now I'm understanding it says something about 30%, but I think the top 10 stocks represent about 40% of the capitalization of the S&P 500. These stocks are also an integral part of the Nasdaq, and they are all heavily invested in artificial intelligence. So whenever we have any news, any hesitation or any good news or anything at all, artificial intelligence, the market is extremely sensitive to these stocks and artificial intelligence, and they will move huge. They'll have huge moves based on any news on these items, right? So, and I'm thinking here, it's probably overshadowing now even interest rates, even interest rates. So when Google expressed some interest that, oh, they're going to spend 200 billion on artificial intelligence and, well, a little weaker than expected growth in the cloud division. All right, that's actually kind of huge, right? And the market has definitely responded to that. In fact, the S&P on Thursday fell 1.57% as AI disruption fears rattled the market. All right. And it didn't help that Cisco tanked 12%, all right, taking the hit and of course bringing a lot of its related stocks with it down with some disappointing first quarter guidance numbers that had come out. And this is what happens, right? It's not just the earnings. The earnings could be great, and in many cases they are, but it's that future guidance, right? First quarter, second quarter, whatever, and well, what's coming up, or they'll say, well, yeah, we had a great quarter, but we don't know if we can sustain it, or they're worried about competition, or they're worried about a lot of different things, right? So there's a lot of money now in AI. And here's the other thing. So people think it's a bubble. And I actually wrote a newsletter on that. I think this was last week's newsletter about AI. So a lot of people are fearing that this is a bubble and it's going to just break open and everything's going to collapse. But my opinion is I'm not so sure it is. I don't really think it's a bubble. Now there may be some elements of a bubble in there and that a lot of overinflated values in the stock, which we know to be true. But I'm thinking AI is as revolutionary as the Industrial Revolution back in the 18th, 19th centuries. This is groundbreaking stuff. I know a lot of people that use AI now in their sort of their everyday lives, and doing things that normally they would have had to have done a lot of research, for example, and you know, get deep into the woods with whatever it is they're working on. But now they just type in a couple of sentences in AI, Chat GPT or whatever it is that they're using, and in seconds they get answers. Excuse me, I understand that, and I didn't verify it, but we were in the trading room the other day when my associate John, he's a lawyer, I guess he's tied into some news, as it happens. And he reported, "Oh my gosh," he said to me, over the session there. He said, "I just got word that some law firm in the States just, I guess they're laying off 1,000 employees, interns, whatnot. That's a pretty big law firm, obviously, but they don't need them because AI is taking over. AI is taking over everything. AI it's in the transportation field. I mean, it's everywhere, and we haven't even talked about healthcare." Folks, check out the newsletter last week. I talked a little bit about that. So Friday the 13th, a couple days ago, that posted the worst week at the end of the day when we finished, posted the worst week of the year. We're down 1.4% with tech and AI jitters, even though we had inflation numbers. They cooled to 2.4% in January, which is actually really good. That's the lowest reading since last May. So normally that low inflation number is reason to celebrate, and the stock would normally shoot up because low interest rates means that okay, well, that's a good sign, and we can lower interest rates and whatnot. So, but that did not happen. We had a little bit of a blip here. It ran up, but SPY just couldn't get a grip and hold on to that 686. Whether it was profit taking or fears, AI jitters, whatever, came back down and it closed, again, lower, a little higher than it opened, but nevertheless. Here's a look at the seasonalities of it all, folks. And this is a chart of the seasonal behavior of SPY. The blue line is the current SPY price. You can see how this thing, jumped up and down here ever since the beginning of the year. Ran up, dropped, ran up new highs, dropped, ran up. It's just trading in this range here of I want to say 668, 669. Sorry, I'm lying to you here. I would say uh, 680. It's kind of hanging on the 680 to 695, 696 level. It's just been really in that range, but there's been some real huge moves here. That blue line is where SPY is now. The red line is a composite of the last 5 years closing price on the daily charts. Now, normally we can draw some pretty good conclusions as to where stocks go using these seasonalities, right? And on some stocks, you can see the seasonality right up there. In fact, I used to make a lot of money trading seasonalities, but then these things work until they don't. And for that reason, you can't just rely on seasonalities like you could maybe at one time. In fact, my early days, I was trading seasonalities, and Hershey was a good one. In fact, just about now, Hershey goes up every year at around February the 6th for 2 weeks. At least it did years ago, and I used to trade that. I used to make a lot of money on Hershey on that. And then a few years back, I tried it again, and it just wasn't happening with Hershey. Now, I guess I don't have my stock up here on my chart, so I can't really check into it. Not that we're looking at Hershey, but that's not what we trade. But I know I stopped trading it because things work until they don't. Anyway, taking a look at the seasonality of it, we stayed pretty well flat last week from a seasonality standpoint. But historically, SPY dropped about 8 points for the next coming up week. Now, whether we continue in that pattern or reverse, we don't know, but it's just good to know that, isn't it? That there's going to be perhaps a little bit of downward pressure in the next few days in the seasonality of the stock. So that's kind of what happened there. And let's take a look at last week, what happened. Well, excuse me, even again, artificial intelligence anxiety is rising, but economic data largely painted a picture of improving economic fundamentals. So again, the market's very resilient to stresses on things like AI, but it's not to say that it doesn't have an effect on the market. Of course, it does. We've had bouts of volatility creeping into the markets, again, particularly in the tech sector. All threats, AI threats to other sectors included the financial services, insurers, real estate, and even the trucking and logistics industries are feeling the pinch of AI changes. And I remember seeing probably a couple of months ago now, I don't know how current this is, but there was some numbers on unemployment causes. And at that time, like I say, probably, I just want to say a month or two ago, approximately 6% of employment terminations are due to AI. 6% are due to AI. Now, that number could change now. I haven't looked at the numbers recently, but I mean, that's pretty huge. So firms are letting people go because, well, we don't need you anymore. We had you do research, but we've got AI doing the research a lot faster, easier, cheaper, and very thorough, whatever. So that's huge. So there's also this ongoing rotations out of the big tech sector into like the Russell 2000 whatnot. Labor market delivered a clear upside surprise. We had 130,000 jobs added in January, and modest hiring is expected in 2026. And I want to take this one space out of there. I don't like typos. There we go. Inflation continues its slow grind lower. We're down at 2.4% year over year, and that's mostly due to lower energy prices. And the Feds look like they are on hold, likely to at least the summer months. And especially with the new Fed chair coming into power. So we're going to see what he does, right? Here's a chart, broadening earnings, an encouraging signal. We see how rotation is coming in from some of the some of these sectors and what they're expecting here for 2026 Q4. Materials, real shoot to the upside here in their earnings. Same with utilities. Technology remains high. Industrials is expected to be a little bit higher than it was this year. Healthcare really took a spike to the upside here. They're expecting quite a move in healthcare and real estate too is picking up here. Financials, a little bit less than 2025, and we're seeing some real growth in the consumer staples, energy, consumer discretionary. So this is kind of what we're looking for as far as earnings growth to be expected for the rest of 2026. Anatomy of market rotation. So as I mentioned, that a lot of institutionals are taking money out of the stocks that earned them some pretty good money in the last while, and they're putting them into other areas. And you can see how the equities is right up there, Magnificent Seven, and we're seeing how there's money being rotated into the Russell. It's pushing up, and it's coming out of the S&P 500. And in particular, a lot of the Magnificent Seven stocks are experiencing a bit of a drawdown now as as the professionals are cashing out of the Magnificent Seven and putting it into other areas. All right, and you see the small caps really taking off here in this chart. All right, here's what happened last week. The S&P actually dropped 0.4%. We have a year to date of now minus 0.1%. Not a whole lot to get excited about, and I'm sure that's going to turn around. But just as a point of reference, it could be worse. As I mentioned, whenever something goes bad, you see it first on the Magnificent Seven stocks, and you can see how that happened. The Nasdaq is down year to date 3%, having lost 2.1% this last week, and even the Dow, it's still up. Dow's still up 3%. The Dow was up actually quite a bit last week. Even with this hit of 1.2%, they're still up year to date 3%. So they're doing okay. But I'm pretty confident the S&P is going to turn around. All right. Might not be this coming week, but we're going to see what happens the next few weeks. Markets, of course, are closed tomorrow, President's Day. Tuesday, we've got the Empire State Manufacturing Index, and I am going to correct this typo as well. Let me go back here, Empire State. Okay, there we go. You know, you read these things in advance, but every now and then a typo still slips by, and then I don't see it until I'm presenting it to you. So, Empire State Manufacturing Index, also called the New York State Manufacturing Index. And on Wednesday, we've got durable goods orders. The Fed meeting minutes. Now, the Fed's already made the decision, so there should be no real news there. But what they're going to do is they're going to present their meeting minutes at 2 o'clock on Wednesday afternoon and just discuss what prompted the Fed members to make the decisions that they had made. Now, sometimes this moves the market, sometimes it doesn't. A lot of it depends on what their outlook is for the future. And they're going to be going over and making any Fed announcements, I believe, in March. That's going to be the next meeting. Also, we have housing starts, building permits on Wednesday, unemployment claims on Thursday, along with pending home sales. Philly Fed Manufacturing Index is also on tap for Thursday, and on Friday, personal consumption expenditures. This is the inflationary indicator that the Feds use primarily, the PCE, personal consumption expenditure. We also have gross domestic product reports, personal income, personal spending, S&P Global Manufacturing PMI, and also S&P Global Services PMI reports. New home sales, not now. Oh my goodness, was I asleep at the switch or what? New home sales, here we go. Um, and consumer sentiment, inflation, expectations. Okay, this is actually getting serious here. Inflation, expectations, and new home. And I think I said new home sales again. Okay, there we go. Let's get this corrected, folks. I'm a stickler for completeness and accuracy. All right, there we go. Inflation. So it's going to be a pretty heavy day on Friday. So this is what I can expect for volatility. Pretty obviously nothing on Monday because markets are closed, right? Medium on Tuesday and high Wednesday through Friday. There's going to be a lot of news, a lot of technical trading. Um, Volatility is going to be high. And don't forget, of course, too, whenever President Trump chimes in and wants to say a few words, volatility tends to rise around then too. So, a good idea to get a schedule or something like forexfactory.com where you can actually see the schedule. As a matter of fact, I'm going to pull that up right now to show you. It's a free website. This is a schedule I use. I know there's a lot of them out there, but this is the one I like to use here. It's a free site, Forex Factory. Go to the calendar here, excuse me, and you can actually make sure you adjust the calendar to your time, wherever you happen to be. Your time, I've got my set to Eastern time, obviously, and then go to the calendar, and just take a look and see. And this will tell you when President Trump is scheduled to speak. As soon as they find out, they post it. Sometimes they'll say that that's for the time. It'll be tentative, but watch for that. Okay, and watch for the market leading up to anytime he speaks. Anytime he speaks or a Fed Reserve chairman speaks, volatility tends to get elevated, right? So I think it's very important. All right, let's move along here, folks. We have many opportunities every day in the stock market. We show you how to find them and how to trade them. And sometimes we even say, not a good trading day today. And there have been days, I think there's some days this week as well, where I just withheld my trades a little bit. I didn't jump in. And other days when I felt very good with the market, I jumped in, maybe did, several trades, this kind of thing. But the market, here's the thing, if you ever miss an opportunity on the market, don't worry about it because stock market gives you lots of opportunities every day. All right. And we try to take advantage of them, and we don't always hit the mark. But we're giving you an update on the 2026 goal. So this is the little program that we're doing. This in the trading room. We are tracking the trades, and if you were to purchase only 5 contracts per trade, exactly what we do. This is what we are tracking to see how much money you would have or where you would sit with your trades right now. All right. And we update this pretty well every day. All trading room trades are included. Anything that we do outside of the trading room is not included. Or if we trade in the trading room, but we don't narrate the trades, a good example there is, let's say, I am narrating something, I'm speaking, and John sees an opportunity, so he is going to jump in a trade. He's not going to not trade because I'm talking, right? I certainly don't expect him to do that. I don't want to cause him to not make money because I'm talking. So if he does not have an opportunity to jump in and actually explain his trade, he's just going to go ahead and trade it. Well, that does not get posted on this spreadsheet, okay? Only the trades that we are actually actively announcing and trading. All right, so there's not a separate goal like we had last year where we're taking 5,000, turning it into 50,000. This program is designed so you can just jump in at any time. Okay. And it's been working quite well. We have had some challenges this week, including some losses. We have had some losses. Um, I was in a trade here from February the 10th, and it was to expire. This is the 696 calls right here. And does it can expire on the 13th? I just took the hit. I didn't want to. I didn't want to stay in it long. I bought it for $4. What happened here was the trade before I took it from 382 to $4. All right, and I believe that was in like probably a couple minutes. And then I jumped back in at $4 right here. You can see it on February the 10th. I wonder if I can highlight this. Maybe if I can highlight it, be a little bit easier to see, right? Draw. Oh, I don't know. Will this work? Will this work or is this too cumbersome? There you go. Oh, that's, you can hardly see that. Shapes. I don't know. I'm gonna try this here. Highlighter. Okay, highlighter. There we are. How about a different color? Well, we'll leave this color. How about purple? Okay, let's try this. Playing around here with this. Okay, see this? So I got in at 382 out of $4. Then I jump right back in again for $4 again. I probably should not have. The reason is because when I got out of it for $4, that was kind of the end of the line for me. I realized this is the end of the line. But I got lured into it because it kept going up. It started to go up again. So I jumped right back in. And I remember it was like in seconds I got back. So, oh my gosh, why did I do that? I got pulled in it. But anyway, I held on to that, thinking that that trade was going to continue to the upside, but instead it pulled back as I showed you on the charts earlier. We had some incredible volatility, some real wild swings, and some crazy things that went. So the market actually dropped on that. I sold it for 215 on April the 12th, 2 days later. I did not want to hold that any longer. The 12th was Thursday, and I knew that if I was to hold on to this any longer, my theta loss would have eaten it up, and I was not going to do that. So I took a loss, pretty big loss, $925. Took another loss, a couple $100 here, a couple days later, and another big one, 1965. John took a bit of a loss here at 185. We are still holding calls. I'm holding calls from the 12th, which is Thursday. I'm still holding on to these guys here. Going to keep an eye on that. Maybe I'll repair it. I'll probably just dump it. Maybe we're going to see where it goes, where the stock goes. And John is also holding some 680 puts from last week as well. Now, here's the irony. Again, John has his set of indicators. I have mine. For whatever reason, we both thought that an overnight, over long weekend trade is going to be okay. But I don't intend to hold on to this for too long. Probably going to bail out of this here on Tuesday or Wednesday. At least I'll make that determination then, and I'm sure John's going to see the same thing. So, but even this, and I wrote this not in red as that where it's not a negative, it's actually a positive. But we are to the good, $6,715. But again, that does not include the holds. That does not include the holds, all right? That is not a negative number, and I probably should not have made it that orangey color because it sort of connotates that it's going to be a negative number, but it's not. It's actually a positive 6715. All right. So we're coming along. We were up over $8,000 here a few days ago, and we'll catch up. Not a problem. We'll catch up. All right. So, and this is what we do. And this is what we do in the trading room. And anybody who follows us in the trading room will know that I'm going to trash all these. Clear all them. There we go. We'll see what we do. So some days you make money. Other days you kind of lose money, right? So my goal is to not lose. Like it's okay to lose a trade, but not lose during the day. So in other words, if my goal is to make, say, $500 a day, I would like to make the money, and but I don't have a losing day. I might have a losing trade or two, but I don't want to have a losing day. All right, if that makes any sense. So I tend to make more trades so that I have my daily goal. Here's the 2-minute tutorial, folks. This is the subject of our newsletter coming up this week as well. Trade small, trade often. Trade small, trade often. The reason is here, especially in times like this, when you see these huge market swings, you see an administration that seems to be very flippant on things. It wasn't all that long ago. I remember, oh, big time, tariffs, tariffs, steel, aluminum, everything's going to be tariffed. There is a 1 ounce of steel or aluminum that's coming into this country that's not going to be tariffed to the hilt. 100%, 100%. Oh, we're going to get Canada. We're going to. Well, now I see that they're backtracking on some of that stuff. Oh, I don't know what the current tariffs situation is on that, but you see some huge tariffs whenever President Trump, love him or hate him, he's very whimsical, I guess. He will put tariffs on if he gets an idea that somebody is screwing him, he'll put a tariff on that country. But then later on, he comes to realize, oh, maybe I was a little hasty, or maybe we're going to make a deal, right? So he puts these huge tariffs on to bring people to the bargaining table, the negotiating table, where he negotiates a trade. This happened last week, I think it was, with India. I forgot the numbers now. Like I don't know, some 80 some percent or something. Initial tariffs, yeah, and it came back down now to I don't know 10 or 5 or something. So this is what he does. But anyway, to combat that, and you still want to make money trading, the best way to do is to trade small, trade often. You're maximizing longer term success by minimizing the risk per trade while increasing the number of occurrences. Leverages. This leverages probabilities to outperform larger, concentrated positions, offering higher returns. I don't know about you folks, but I used to do position trading, swing trading, and that was really good when it worked, and there was some stability in the markets. I don't sense that stability anymore. In fact, far from it. Yeah, there used to be a time you'd think that, oh, for whatever reason, we believe this trucking company is going to, have good earnings or this or that or whatever. So you would buy these positions for this longer term outcomes, right? But it's very hard to anticipate that anymore. It's really, I'll say near impossible, right? Even earnings. A lot of companies, they have great earnings, but then they come on the conference calls and they say, well, we don't know if we can sustain it, or we have some issues with AI, and then all of a sudden the market completely punishes that company. But this is what we do. You're leveraging these probabilities. You're keeping individual positions under 5% of your buying power. All right. So if you're, I mean, this is what they say. Obviously, if you have, say a smaller account, let's say you only have $10,000, to trade. Well, I might just trade $1,000 or $1,500 of that. Okay. And this way I can survive those losing streaks and market volatility. So maybe I'll just trade 2 or 3 contracts or 5 contracts or something, based on my buying power. And I'm not going to go crazy, right? Never, ever, ever put all your eggs in one basket. Never, no matter what, no matter what you believe, no matter what you see, no matter anything. It's just too insane because when that stock goes against you, it goes against you in a big way, you could very easily blow up your account. All right. So trade often, increase the number of sales to allow probabilities to play out over time. It's really a numbers game. You want to manage risk by buying time. This is very important. We talk about this all the time. All right. Zero date expiration. Yes, you can make a lot of money, but it's also high risk. And when the stock turns against you, it's near impossible at times to actually recover. Okay. You might as well kiss your investment goodbye. You don't want to do that, right? Buy time, even though you're buying small, buy one or two contracts. Pick up a dime or 10, 15, 20 cents or something like that. Might not make much, but if you do it a lot, you can actually, push your account balance up in a very nice, gentle way. Why it works? You got high win rates, low volatility. Lower your volatility when you spread out the risk is what I'm trying to say here. And simply a law of large numbers, right? When you have many trades, if and when something turns against you and you take a bit of a hit, it's okay. It's not the end of the world. It evens out. It evens out in the long run. I mean, conversely as well, when you have a huge gain, it's not going to make that much difference on the other side either. But if you have a lot of small gains, they add up nicely at the end of the day. You want to reduce the volatility of your overall portfolio's expected return, comparing that to a few large bets. And that's what I'm going to call them because in this day and age, it's almost a gamble, isn't it, when you're doing these trades for longer out position or swing trades. It's very difficult to assess where the market's going to go in those trades. So I like to just look at these small term gains, scalps. I call them scalps. And you got to actively manage these things, right? Frequent trading allows for regular adjustments. You can actually go in there and maybe take half off the table, maybe leg in, or if it's simply going against you, take some, take the hit and go on to the next one, right? But just trade small, trade often. This is a chart courtesy of Tasty Trade. Actually, I found this somewhere. And it's the impact of position sizing. They do a lot of studies on this stuff. All right, they do a lot of studies on this stuff, and I guess I'm not sure what the time here, performance, or when they actually prepared this chart, but gives you an idea that over a 10-year study, those small 1% gains, the win rate was 81% versus the larger gains was only 69%. Now, maybe the larger gains, maybe they made a lot more money, but I think you'll probably experience greater success by trading small, trading often, going for those smaller gains, and just ramping it up that way. Um, This is a defense against outliers, and we have these outliers. An outlier trade is like a black swan event or extreme market moves. Black swan event. These are out of nowhere. Suddenly you get a massive sell-off or something, right? For no rhyme or reason. Somebody sneezed, right? Somebody looked the wrong way. Could be something as innocuous as just some crazy economic report that normally would not have much of an effect on the market, but for some reason, some big investor, institution saw that I don't know where it's going. I'm going to dump $1 million, and suddenly there's a big sell-off, and of course everybody else jumps ship as well, like rats off a sinking ship, right? By trading small, trading off, you're kind of defending yourself from these outlying trades. You may not be making a whole lot per trade, but you're also not going to lose a lot. Capital efficiency helps smaller accounts without over leveraging. Mechanical execution. So it's going to be very mechanical. When it hits a certain, you get in, you have your target price, which you determine in advance, right? And this is what we teach in the trading room. When it hits it, you sell. Just sell it, right? Close winners early, wait for the next up. Don't worry if it goes up another, whatever goes up. And let me tell you, it is very painful watching those. I watched some of those here this week, and I thought, oh man, why did I sell so early? I could have made another, 50 cents if I just held on. Coulda, woulda, shoulda. Don't worry about it. If I made money, I made money. You're never going to go bankrupt taking little profits along the way, right? John's own philosophy is take what the market will give you. Talks about that all the time. Lower volatility, all right? Law of large numbers. And you're getting reduced volatility of overall portfolios expected return, again, compared to a few large bets. I think I talked about this earlier. And active management. I think I saw that before somewhere. Anyway, that's why you should trade small, trade often on these in these volatile times that we are experiencing right now. Folks, we teach this stuff, and I know many of you have heard this before, but I can't emphasize enough how important it is to get involved with our trading programs, right? And our programs are only available on DayTradeSPY.com and our programs. Some people will try to imitate what we do, but that's not the real thing. You want to be the real thing, right? Folks, some of the programs we've got here, actually, these are the programs. Inner Circle. You're going to get the morning market analysis. This is where we do the heavy lifting. In particular, John. He likes to write the morning report. I like to be more concise. I like to be more concise than he is, but he's very thorough, and he loves to get into it pretty deep. But every morning he sends out his morning market analysis. We send you a follow-up report later in the day as to what we actually did. And you're going to be invited to the Wednesday night interactive meetups. They're recorded if you can't make it. They start at 8 o'clock Eastern time, so I get it. It's like the middle of the night in Europe. Uh, but any questions, bring them into the Wednesday night meeting room. It could be questions about your trading, your particular trading, questions about chart setups, the market itself, or strategies, or anything at all. Talk about Fibonacci, Andrew's pitchfork, anything at all. Right? John hosts the Wednesday night session, and he does an amazing, just a phenomenal job with it. And seriously, for $2.99 a year, which works out to about $5.75 a week, all right, I don't even know if I can buy a coffee and a bagel or even a coffee and a donut for $5.75 anymore. Maybe a coffee and a donut I can for a week. This is insanely inexpensive, and everybody should be in the inner circle for $2.99 a year. Hey, listen, if you don't like it, let us know within 30 days. You get your money back. I mean, there's no risk at all. The day trade. So we had a couple of programs here that actually give you our trades that we are looking at trading. Okay. This one here is the signal. This is sent to your cell phone. Algorithm based. All right. When a very certain situation sets up, it triggers the buy order, and it tells you which particular option to buy. So immediately you want to buy this, right? Just buy it. Now, if it's going against you, if you get the signal, let's say it's a call option, but you're looking at the chart now, it's turned red. Wait until the pressure on the 1 minute chart turns back to the upside, then buy it, immediately put it up for sale for a 5% profit target. In the unlikely event it is not sold by 4 p.m., sell it at market close for whatever the market will give you. Price for this, $14.95 a year, $3.99 a quarter. All right, $3.99 a quarter. So what is that here? $3.99 a quarter. Um, we divide that by what's that? $99.75 a month. Is that a month? Yeah, divide that by 4.3. See, we're talking about here about $23 a week. Or let me see, roughly speaking, it's about $4.60 a day. The next up is the pick of the day, similar to the signal, but a little bit different in that John and I actually sit down every morning before the market opens. What do these guys want? And we determine manually whether it's going to be a call or a put based on all the inputs that we give it. So we look at the news. There's a number of news feeds that we look at, news items that we look at, and we also analyze the technical indicators. We look at the charts, whatnot, all the various inputs, and we determine is it a call or a put. This is designed to be bought right at market open. All right, so we email you this just after 9 o'clock, but at market open, buy it. Now, here's the thing. Let's say it's a call option. The market opens, it's a red candle on the 1 minute chart, and another red candle, then it turns green. Well, you buy it on that green candle, right? If it's calls, buy it on the green candle. You'll get it for a better price, right? So still use common sense, obviously, right? And if it is not sold by 4 p.m., sell it at market close. Now, that's what we have to tell everybody because that's the deal with Eagle. They want to see this closed out by the end of the day. However, those people who have gone through our training or in a trading room will understand that these trades in the pick of the day, they may actually be held overnight because there's ample time on these trades. You have until, a lot of cases into next week. Mondays and Tuesdays, you'll have until Friday the same week. Wednesdays, Thursdays, and Fridays, you've got until Friday the following week. So they may be held overnight. A lot of people hold them overnight, and actually they make a lot of money the next day. Same price as the Signal, $3.99 a quarter, $14.95 a year. The trading room. This is our signature product, our signature service. John and I host this. Two professional traders. This is not something we do on the side. We don't have regular jobs during the day. We just kind of do this for fun, kicks and giggles. No, this is what we do. Professional traders have been doing this a long time. Combined, we have over 45 years combined market experience. That has to mean something. Trading room is interactive, learn and earn, fully narrated. And this is where our strategies come alive. Our strategies are OMG strategy, out of the morning gate. Um, and other strategies, right? Bread and butter strategy and various strategies, right? Daily, 9:20 to 10:30 Eastern time. Okay. We don't hold you hostage all day. What we do here is we simply get in, narrate what we see, and then we make the trades and make some money, and we're done by about 10:30. Sometimes we go a little bit over. 24.95 a year, 6.99 a quarter. You can't beat that. Best value, and if you know what calls and puts are, this is where you need to be. Folks, all these programs offer a 30-day money-back guarantee, no questions asked. If it's really not for you, and you know what, we recognize that it may not be for everybody. It's cool. We don't hold you ransom. Okay, not at all. All right. All right, let's look at some questions. Excuse me here. Let's look at some questions. Okay. Is your day trading spy in your trading room trade? Is your day trading spy in your trading room trade? I think the question means is the pick of the day in our trading room? The answer is no. So the pick of the day is a separate subscription to the trading room. And we don't talk about what the pick is going to be in the trading room. We'll talk about that perhaps later on after the fact. Okay. Um, so it is a completely separate subscription. Um, and the reason is very simple because those people, it's not fair to the people that bought the pick separately if we give the information out in the trading room. So we can keep that separately. Am I still holding calls from last week, Mark? I answered that. I'm still holding calls, and John is holding puts. We're gonna see what happens. We're gonna see what happens, and whether we repair them, dump them for a loss, or just let them, um, organically come back on their own. We'll see what happens. So, okay, Derek. Okay, so a question concerning our live training event that we actually had programmed. There was a threshold that they needed, and they just did not meet that threshold in time to get all the bookings and stuff. So they pulled the plug on it. That's all it is. So it was definitely a very cost-effective way of learning everything, but there is going to be something else, Derek. Okay, so pay attention, and we're going to let you know as soon as we hear. All right, and watch your emails. There is going to be a substitute for that event. I'm guessing it's going to be a series or something of live events on or some kind of training in the online. It's going to be an online thing. So, but yeah, the unfortunately, and we were looking really forward to meeting a lot of people out there, but it's funny because we were close. We were close to getting that threshold, and then they put one more push on it, but the numbers didn't work out. So anyway, sometimes these happen, right? All right. Okay, Rodney, am I adopting this fur baby? It looks like she's adopting me. I bring her. You know what? Let me see if I can grab her here. She still has her claws, and we got into a little fight yesterday, and she used her claws. Hey, stop it! I'm gonna break your legs. Do not put your claws in me. All right, and here she is here. Listen to me arguing with a cat. Okay? Look at the camera. Look up there. See, say hi to everybody. There you go. Okay. All right. Boy. No, you are not Lucy. You see a picture of me sometimes with a dog, a Bernese Mountain Dog. That was my beloved dog that we've had for I think we had it for about 8 years or something. Was it 8 years? 9 years? I can't remember. I think it was like 9 or 10 years. I can't remember now. But actually, it was 1 year ago today that we put her down. 1 year ago that we lost Lucy. She's still our favorite. This cat here is just a pain. Uh, anyway, I don't want to bore you with that. Is there any hope for the calls? Absolutely, Kent. There's lots of hope for the calls, and we're going to see what comes out when news this week, especially the Fed meeting minutes on Wednesday. I think it's going to be some anticipation there of some pretty good results. And here's the thing now, artificial intelligence. One day there's some negative news, the next day some positive news, and this thing's been swinging like crazy. So I anticipate something is going to push the market right back up again, just like it had done for the last several weeks. So I'm going to hold on to these things and just ride it back up. All right, we'll see what happens. How much value do you put on the VWAP, VWAP for determining direction? I don't put any value. I don't watch, Mark, I don't watch the VWAP. I looked at that years ago. I don't know why I don't. There's a lot of indicators I don't look at. So here's what happened, and we're going to go overtime, folks. I hope you don't mind. I'm getting in a roll here, and I want to get all the questions too. Um, I used to have a lot of indicators on my charts. And in fact, this one gentleman I haven't seen, I can't remember his name now. I want to say Rick. I haven't seen him in a while, but I would see him at various functions that we would go to. So we would go to these different courses and stuff, and they used to have courses like there'd be okay in Tampa one time, a few months later there'd be another one in New York, another one down in Atlanta, wherever. So we'd go to these, and you would see the same people at all these events. So you got talking to this one gentleman, and I think we were in Orlando at that time. He said, "We're coming down to check out my setup." And I remember this guy. He used to smoke a lot, and so I go down in his office, and and he had this massive setup up there, all these monitors and CNBC on TV up in the corner, and I think he had about three computers and I don't know, maybe 10 monitors or some ridiculous thing. And I said, "Oh man, Rick, you must be making a lot of money down here." And I remember he butts a cigarette out, and looks up at me and says, "Actually, I can't make any money to save my life. I don't know why." I said, "Well, I don't know, Rick. I mean, you know this stuff better than better than I ever will, but I'm sensing that you got all these indicators that you are waiting to set up. You're waiting for all these indicators to come into their own, right? And once they set up, then you're ready to make the trade. Except when you have like, I don't know, 20, 30 indicators, and then by the time they all present themselves the way you want, uh, it's the end of the trend. And then you're jumping in, well, the trend's over. The trend is over. And that's probably why you're not making money. So I said, if I can make a suggestion, go through and remove all those redundant indicators that don't really tell you anything that you don't need. Now, I had done that exercise, before this event, and I remember I used to have a lot of indicators too. RSI and this and that, and I don't even know what all they were. But I noticed that all of the indicators gave me history. Nothing gave me the future, of course. But we have deduced, I guess, is that the word? That certain indicators, the way they set up and the way you configure them with others and chart patterns and whatnot, that you can actually fairly accurately predict where the market's going. But if you have too many indicators, it clouds the charts. You can't even see the price charts anymore. So I removed everything that I don't need, only kept on what I use myself, and it works very well for me. John did a similar thing. He looks at other things. And so we will often talk about our indicators and what we're looking at. And when we get all our indicators lined up, and if we say, I think you should buy some puts because it's going to go down, he says that, I say that, you might want to buy puts. So it's been working very well that way. So my suggestion, if something is not working for you, get rid of it. Get rid of it. All right. Reggie spent my first week in the trading room. Glad to hear that, Reggie. So here's the other thing in the trading room. This is one of those things that let me explain this here. The longer you're there, the better trader you're going to be. All right, the longer you're there, the better trader you're going to be. I'm going to remove this. What the heck? There it is. It's very simple, right? It's like anything else. The more you do something, the better you're going to be at it. I find that those people that have been in the trading room for a long time, they have become excellent, excellent traders. And I know that because they chime in with the results all the time. And it's just so exciting to see that. I just made 5%. I just made $1,000 today. And I just made $600. I'm done for the day. And these kinds of comments. These people did not become good overnight. It's not like you're going to be in the trading room for a couple days or a week or even 2 weeks and all of a sudden you're an expert trader. That's not the way it works. So it's staying there for a long time. Before you know it, you're going to be a great trader. So question also from Kurt, don't understand Delta yet. Just a very brief primer on Delta. Delta is one of those Greeks, and Delta is the relationship between the option and the stock. And let me show you something here. I'm going to just flip over to a screen. Where is it here? If I bring this screen up here, okay, let me see if I can do this. Okay, hang on a second here, number 45. Screen number 45. Let me just kind of show you what delta is. Here's the here's a comparison between stock options and the stock. So let's say you want to buy 100 shares of S&P 500, or SPY rather, SPY. SPY is the stock that follows the S&P 500. Okay. The stock is about $681 a share right now. So it's going to cost you $68,100. But if you buy one contract for, say, $3, that controls 100 shares, so it's going to cost you $300. Now, for the sake of this discussion, I'm not including commissions, okay? Now, let's say the stock rises $1. $1, one whole dollar. Well, now your stock value is worth $68,200. But the delta on an option costing $3, that would be roughly 50 cents or a 50 delta. So if there's 50 delta, that means the option is going to move up 50 cents. So the delta is the relationship between the option vis-a-vis the stock. If you see a delta of 45, that means that if the stock moves up $1, the option will move up 45 cents. So you might think you're getting a little ripped off here, but when you look at the fact that you're only paying $300 for the option, and you're getting a delta of 50 or 50 cents, now your options were $350. Well, take a look at your return on investment. Which would you rather have? 0.15% on the stock or a whopping 17% on the option, right? 17% on the option. And this is exactly what we're doing here, right? And that's the relationship between the delta. And don't worry about if you're not really picking it up because you will very quickly pick it up as we discuss these and other things in the trading room. So just stay with the trading room. All right, and thank you very much for being in the trading room. All right, feel free, and this goes for everybody. Feel free to put your comments in the trading room when you're on. All right. Okay. Yes, there's a question here. If you try to combine your indicators, it'll be too much to look at in a timely manner. All right. So I narrate the trading room Mondays, Thursdays, and Fridays. John does Tuesdays and Wednesdays. So I'm the primary host. He's the secondary host. And on Tuesdays and Wednesdays, he is the primary host. And it works out very well because he will talk about his indicators. I'll talk about my indicators. But eventually you're going to come to know both of our indicators. But what I like to do is tell people, find somebody you're actually very comfortable with, one of us. I think if you try to combine them, you are going to maybe overwhelm your charts, overwhelm your thinking and stuff. And as you're waiting and trying to see if there's a good setup here, you might be missing the trade, right? It just might come and go too fast. So, and this is why I say I like to trim down my indicators. I don't have a lot of indicators, but the indicators that I use are very effective, and I think that's more important than, it's quality over quantity. And the same with John. But I think sometimes if you try to combine them, it could be counterproductive. That's just my opinion. See how you feel. You might be comfortable combining them, or you might feel comfortable picking one or the other. So, uh, Alex A, not listing losses again. I thought I listed the losses in our, and I'm not sure what you want me to do with the losses here, Alex. I put the losses up here. Let me go back to this here. There we go. So yeah, we had losses here. Definitely had losses. So let's talk about the losses this last week. I got into, okay, the market was very crazy. This one here, and I'm going by memory on February the 10th. What was that? That was Monday, wasn't it? No, that was Tuesday. Tuesday. Oh yeah, I remember Tuesday. Actually, I had to cut out early because I had a dentist appointment. And I got into I talked about this one. This is the one that I did. I got back in for $4. I exited my first trade for $4. I should have stopped there, but instead I got greedy, thinking it's going to go up another 10, 15 cents. Didn't happen. Reverse course. I bailed out a couple days later on the 12th, took a loss of $925. This next one was John's loss. I cannot comment on that loss, except that what John likes to do is he likes to spend less time in a trade than I do. So on that particular one, he was in calls. What he probably had done on that day was saw that the calls were not working. And again, I'm just kind of guessing here, and he probably bailed out of those before he got in too deep. Sometimes if it's down 20 or 25 cents, then he bails out. So he doesn't mind taking a couple $100 loss on that day. All right. So these 2 days between John and myself, and of course we had some winners in here. We had a net on the day of almost $700 for loss. This other day here, February the 12th, which was Thursday. Thursday. Okay, so this one was. Oh yeah, this one was calls again. This one was calls. So let's go back to that Thursday. This is what happened here on Thursday. I'm just going to go real quickly back to Thursday. As you can see, uh, I was in calls. Believe it or not, the market looked like it was actually setting up to go to the upside very nicely with all the indicators and the fundamentals and everything we're looking at in the beginning. And we're just looking for this breakout. We were actually testing the 696. And I remember discussing this with John that, it's looking very strong. It was bouncing up into the 696, was ready to pop to the upside and seek new highs. Uh, excuse me. But as it turned out, I think this could have been the day when what was it? Google announced they're going to put in a $200 billion investment in artificial intelligence, and I think the market did not like that at all, and the market just tanked. I remember trying to sell it at one point, but the market was just tanking so fast. I couldn't get a decent sell order in, and by the time it went, by the time I was okay with it, the market just simply had fallen so much. And I was of the opinion that, okay, if it falls like this, it usually falls for a reason. Okay, it falls for a reason here. And I want to get rid of this guy. It's driving me crazy. Clear all my drawings. There we go. It drops for a reason. And usually that reason is going to wash out fairly quickly. Okay. It did not. I lost confidence in that trade, and that is the reason I bailed out of that one. I just lost confidence in it because there was more, it wasn't a technical reason when it went down. It was more of a fundamental reason. And this whole AI thing, it took down a lot of AI, other companies that were involved in AI. I think if I remember that day, Meta and Microsoft and everybody, they all tanked. They all tanked. So that was the reason that I bailed out of that one. And sometimes if I lose confidence in a trade, I'll just say, you know what, screw it, I'm out of this, and I'll take the hit and look at the next one. Now, there's a couple trades we're sitting in right now. I'm still sitting in these calls. I have reason to believe that because they do expire on Friday, I have reason to believe the market's going to reverse and go back up. And even if I don't get my whole 557 out of that, I'm willing to take a bit of a hit on that one. I'm going to see where that one goes. That's been happening a lot lately, so I'm going to be pulling down and trading smaller, trading more often. Instead of going for 15, 20 cents, I'm going to aim for probably somewhere between 5 and 10, maybe 12 cents per trade. That's part of that trade small, trade often. John took another hit here, and I'm going to say this is probably very similar on the calls. He probably got the calls, bounced off resistance, went down, broke support. He probably bailed out of it with a $185 loss. Again, this day here, 1970 loss, except we're going to see what this one, February the 12th, is going to give us. Maybe another loss on that one as well. We'll see where that one goes. And John is also sitting in these puts right now. We're going to see where the market goes on Tuesday, and we'll see what he bails out of those for as well. So, all right, and I hope I addressed those. Those are the losses for this week. Excuse me, my cough here. Just kind of going through the questions here. A few days buy calls, market tanked, down 20%. What to do if you have time? If you have time, so a couple things can happen when you have time. The market can either organically come back on its own, it'll give you an opportunity to repair the trade gone bad, or you can dump it for a loss, and hopefully you're not going to get as much of a loss as if you had 0 or 1 or 2 days till expiration. And again, trim down. Next trade, trim down on fewer contracts. Build up your accounts slowly. Fewer trades, more trades, fewer contracts. Go with smaller investments, right? Do you trade in the trading room? Absolutely. We trade in the trading room. We use both sim accounts and real accounts. John and I have both real accounts. Now, by law, we're only supposed to show you our sim accounts. So those are the charts that we are showing you, but we also talk about our real trades. All right. Okay. Okay, so here's a comment here. I was in some calls, held on Thursday for Friday, and SPY went up 0.5%, but my trade lost more. How does this happen? Two things can work at your options. They can chisel away at your options. Time is the big one. When you're in a Thursday and they expire on the Friday, that theta loss or time loss is very real and very serious. You don't want to end up holding an option into Friday if you don't have to, because that theta loss is going to eat away like a fast-moving cancer. It's going to rip right through your options. Okay, you're going to lose a lot of money. In other words, the stock has to go up an awful lot to make up for your theta loss, right? The other thing is volatility. I don't know what the volatility was like. I know there's some days in there the volatility was actually pretty high. And when volatility is high, you're actually paying a pretty good premium for the option. All right. So then what happens is this, you buy an option, say for $5, lots of time, lots of premium in there, lots of volatility, but they suck the volatility out of it. So let's say the volatility is, I don't know, 28%, the implied volatility. And then for whatever reason, the volatility drops to say 20%. Well, that option you might have paid $5 for might be worth only $4.25. So you just lost, say, 75 cents on the volatility squeeze on top of the theta, and that is why the option value drops. The idea, I don't like to hold anything Thursday to Friday. That's kind of that's a very dangerous spot to be in. So I like to be out of these trades, preferably Tuesday or Wednesday. Once in a while, if I really see these are on options that expire on the Friday. Once in a while, if I really see a real reason to be in on Thursday, I might hold on till Thursday. All right. Uh, pick of the day trade in your room. Talk about it. Okay. So the pick of the day. This is the pick that is sent to your inbox every morning around 9 o'clock, 9 o'clock or so, between 9 and 9:10. This is designed to be bought right at the market open. So the pick of the day is anchored in time. What we're saying here is if you buy here, some point during the day, it's either going to go up or going to go down the stock to give you your profit on that pick. So it's just anchored in time and relative to that time in the morning. And there's ample time built into these Mondays and Tuesdays. It's that same week's Friday's expiration. Wednesdays, Thursdays, Fridays is the following Friday's expiration. The idea is to buy it as soon as so as soon. Let's say it's a call option at 9:30. When you see the market pushing up like a green candle on the 1 minute chart, just buy it right then and there. Get in, immediately put it for sale for 6% gain. Walk away, come back, and market that, and the profit will probably be in your account. These days, usually it's been giving it to us right within a few minutes. So it's been working really, really pretty good. So, question in the trading room for 24.95. Do you get the pick of the day? No, that is a separate subscription altogether. Okay. They are both excellent subscriptions. Is it best to subscribe to the trading room here with you, or is it 24.95 if I subscribe from Eagle Online? I believe if you go to the website, you're going to end up paying more for it. I'm gonna when I finish here in a couple of minutes, all right, I'm gonna pull up those QR codes. Click on the QR codes, scroll down to the end, and the you'll see the the plans, right? Whether it's the quarterly or the yearly, right? So click on that. That will give you, I believe, a better price than if you went to our website. Okay, so try that. So, all right, so that's really good. Okay, my risk tolerance is so low now, I can't give anything back. I feel your pain, Rod. The thing to do, so if you got a little bit burned here, folks, the thing to do is go back into paper trading. Slip back into paper trading. Do that a little while until you get at one with the market. You feel pretty good. Then do say 10 paper trades, one real trade, nine paper trades, another real trade, another eight or nine paper trades, another real trade. Right? That's how you do it, right? Reggie, thank you for that. Inner Circle is great, even for people who can't trade much. Great service, well, way worth the money. Thank you for that, Reggie. All right. Listen, you know what I'm going to do? I want you to put a number between 1 and 100 in the questions box because we're going to have our contest, folks. All right. Pick a number between 1 and 100, and I'm going to bring up our Day Trade Spy random number generator. Uh, and I'm going to just quickly scan some of these other questions if I can get to them. If not, I don't want to keep you too long. I didn't realize the time here. My goodness, it's already 9:23. Um, and I'm going to bring up the number generator. Okay, so we're going to pick a number here. So pick a number between 1 and 100. The winner gets Triumphs and Tragedies. It's an ebook. Triumphs and Tragedies, which is a compilation of all these stories, not all of them, a lot of the stories that I've had here come through in Day Trade Spy over the years. True stories. And it's very exciting to see some of the amazing success stories and also some of the horror stories that I talk about in in the ebook, including my own. Okay. All right. Okay, Reggie here. Calls last Thursday about when you did. You left the trading room. I was watching and continued to drop. Sold them for a big loss, going right into puts. I made money in the end and sold for a nice big win. I'm pleased, and I learned that from you guys last week. Thank you for that, Reg. Um, so yes, the pick of the day is a different stock, or might be the same. It could be the same, but it's not the same pick as the Signal. Signal and pick of the day are two completely different services. Signal goes into your cell phone, and I believe an email as well. Buy it right away. The pick, you get that in your email. Buy that at market open. All right. Okay, we are going to cut off the numbers in about 10 seconds here. All right, get your number in right now, folks. And I'm going to pull up our random number generator just so you know. This is not the number here. This is last week's number or something. And I am going to, let me see. All right. Okay, so, all right, got everybody's number? Okay, the person closest to it gets the ebook Triumphs and Tragedies. Okay, wow. A lot of numbers. All right, here we go. I'm going to click this thing here. 5, 4, 3, 2, 1, and the number is 24. 24. Okay, let me get these numbers real quick here. Let me just scroll down. Okay, who do we have here? Hang on. Arnold is at 15. Okay. Oh, Mark D is at 18. He's the closest. Bear with me. Give me a second here. The number is 24. Okay. Stephen G is at 31. Okay. And let's see, scroll down. We have Don B at 27. Finish scrolling down here. And it looks like the winner is Don B. That's D-O-N-B, Don B, not D-A-W-N, D-O-N, Don B. He came in at 27, only 3 numbers away from our target of 24. Congratulations, Don. I will send you the ebook, Triumphs and Tragedies. You should get that within a few minutes, okay? All right, so with that, I'm going to leave up this the QR codes and just go ahead and click on those. Click on all of them if you want, and we'll see you the next time. This is recorded, and the recording will be published on the website probably the next 2-3 days. Been a pleasure, folks.
Trust the process and keep your eyes on the prize. I can tell you what